Thank you, everyone, for joining us here today. Probably no better time than now to be having a discussion about crypto in the industry, given... Yeah, I guess I'll open this up. Did anyone buy the Trump meme coin last night?
All right.
One person.
Dinner on that guy.
There we go. For real. Or at least drinks.
There you go.
But no, thanks everyone so much for coming to join us. Obviously, we'll do introductions here. This panel is very crypto focused. We're evangelists of all things blockchain. And so I guess to kick things off, I'll introduce myself real quickly. I'll be the moderator for the panel today. My name is Ross Fredman. I work for a company called Worldpay. We're actually a global payment services provider, and I head up business development for our crypto division. So we basically do fiat on and off ramps. So the ability to buy crypto with cash on a credit or debit card and other payment methods. So we service 8 of the top 10 exchanges: Binance, Kraken, OKX, Gemini, Crypto.com, several third-party on-ramps, MoonPay and Banksa, and several folks in the wallet space too, like Exodus and Bitcoin.com. My personal background has been mainly fintech and payments, and got directly into crypto about 5 years ago. And so if anyone wants any type of knowledge or to have any kind of discussion on fiat on and off ramps, please feel free to get in touch with me after the panel.
Paul?
Hi, everyone. My name is Paul Puey. I'm CEO and co-founder of Edge. Co-founded the company about 10, 11 years ago. I've been in crypto professionally for that amount of time as well, building and through the ups and downs and sideways turns that the crypto industry has made over those years. Before that, former NVIDIA, Cal grad. And we really build, our app is really focused on privacy and simplifying key management to let people own and control their own crypto, which is what the industry was really built for. That's what Bitcoin was built for, but the industry is bifurcated. But learned a lot over the course of the years, but I like to say that the industry grows faster than I'm able to accumulate knowledge. And so I'm always looking at learning from other people around me, like the people on this panel.
My name is James Burkett. I'm a co-founder of a fund called Florin Digital. I'm based here. I have some partners based in Western Europe. We invest predominantly in crypto. We have a fund dedicated to tokens only. We do some fintech investing, very crypto adjacent, and then we do a little bit of broader crypto equity investing as well. Have been a professional investor in crypto for about 5 years. Prior to that, I was a CFO of venture-backed startups, a SPAC, and a couple of other little things in the financial services world. I touched crypto for the first time in college. I mined Bitcoin when you could still do that on a MacBook. So dating myself a little bit, and absolutely sold it for, I don't know, $30, $40. So I'm here. I'm not blissfully retired, but yeah, enjoyed spending time in the space. As everyone said, it moves really, really fast. It's kind of wild. I think we've had ETFs for almost a little over a year. When it feels like we've had a Bitcoin ETF for like 4 or 5 now. So yeah, here we are. Amin.
All right, thank you. My name is Amin. I'm a research analyst for EVM Capital, which is an early stage Web3 firm based out in New York, focused primarily on our investment thesis around governance tech, process automation, on-chain identity, and financial infrastructure. So personally been involved professionally in crypto since 2021. Been a community builder in the space since 2016 for crypto specifically, but in a lot of the amount of rate of change of adoption in this last couple of years has been a sheer amount of waves, but always very insightful to see the amount of things that have come up in the change of narrative, but also the different types of adoption from the developer, institution, and founder perspective. So always looking to learn from different perspectives on that front.
Hi, everyone. Thanks for staying for the last panel of the day. My name's Chris Groshong. I'm the founder of Coinstructive. I got into crypto in 2013, and I come from the biotech space, so I have a degree in genetics, but there was no real good way to go from biotech to fintech. And so, at least not for me. And so I met Paul in 2014, and he kind of took me under his wing a little bit and showed me some folks in the space. And that's in 2015 I launched Coinstructive. Now it's evolved over the years, but for the last 5+ we've been doing crypto fraud investigations, so blockchain forensics and working with victims. and more lately on things like expert witnesses, being an expert witness for things like divorce cases, mergers and acquisitions, bankruptcy, receiverships, and things like that. And then I also act as a chief compliance officer. So I have a team of people, and we act as a compliance department for hire, basically, so fractional compliance for financial institutions in this space to try to keep their founders from having to pay too much for the things that they need to help keep them out of jail. So those are the two things that I like to help people with most.
Perfect. All right. To kick things off, obviously the industry has come a long way. Bitcoin got founded back in 2009. So in reality, we're still in the infancy stage of crypto and blockchain in general, but some of us like to say 1 year in crypto is about 10 years in every other industry. And there's still so much potential ahead. So I guess we'll start off with Paul. What do you think are the most exciting opportunities for builders and innovators in the space right now? And what still needs to be built to drive more innovative adoption?
So we're seeing a lot of repeat projects. Alec, you could probably, James, chime in on this. I actually know an Alex Burkett, and that's probably why I'm confused. But James, you could probably chime in a lot on this. Being an investor, you see a lot of the projects. But from a personal level, being a company in the crypto space, I know there's a handful of us, we actually operate in crypto. And I think a lot of tools are missing for full business operation in crypto. Think of all of the back-end accounting, payments, invoicing, payroll. All of those we're really doing very manually. Like we're literally scanning QR codes, sending transactions one by one, and then taking those transactions, putting them into accounting software, having to properly tag them. All of that needs to be much more tightly integrated with traditional finance. And if there's anything that I feel like is definitely missing is that integration of traditional finance software with crypto software. So the software that can talk to your bank, talk to your Visa card processor, download those transactions, but then also sync up with the transactions that maybe you've collected as a merchant. And from the viewpoint of a merchant, point of sale as well. And so while we haven't quite entered the utility phase of crypto, it's still very speculative. I think one of the things that's hindering the utility phase is the lack of that type of tooling. So I'm not sure who's a builder here and actually looking at actually creating projects and whatnot. So we got at least well, we have the payment rails, ironically, and crypto is a payment rail. That's one thing. It is a payment rail, but a lot of the back-end infrastructure to accept the payment, track the payment, pay other people with it, that's effectively what's missing that I would love to see, especially as a company that operates with it, and to enable other companies that want to operate with it.
I think I'd echo a lot of that. I think the big opportunity is to use crypto where you don't necessarily know you're using it or even care you're using it. I think stablecoins are the killer app, sure, but nobody really uses them. Like the killer use case for stablecoins today is to buy crypto. So like 90% of people are going and buying Doge and Trump coin and all these different things. Like the actual utility of stablecoins is fantastic. I mean, look at any bank interface. If you go to your local community bank, it's going to be really bad. If you go to Chase, it's just going to be kind of bad. And this is the software that these people are working with. If you think about how financial services work, like I spent the first 10 years of my career doing M&A for financial services companies, how payments work, how all these different things actually work. If you go try to roll your 401k or your IRA from, say, Fidelity or Schwab, they're going to mail you a paper check. And that's predatory in a sense because you're going to get a check, 20 days later, and they're going to roll that money overnight for 24 days. And when you have millions and millions of people doing that, they're making a lot of money just on that float. Okay, let's do something else. I want to transfer my IRA at Fidelity to Charles Schwab. Okay, we're going to sell everything, give me cash, take 30 days, move it back, let me go buy all the other stuff. I mean, we're not talking about huge fees anymore, but why does that take 30 days? I can send money to anybody on Earth you pick the network in 5 minutes, Finality in 12. I mean, that's insane. To send a wire internationally is way more complicated than looking at some sort of 24-digit alphanumeric number. 3 banks being involved for me to send money to my business partner who's been KYC 9 times and lives in Amsterdam, that's absolutely ridiculous. So stablecoins are the killer use case, but how we use them, I think, is really, really important, and people are just scratching the surface there.
Alrighty. In retrospect of what I think about, especially from a developer standpoint, I think a lot of the opportunity and challenge in getting more innovation in that realm is the interoperability that comes with different types of frameworks, particularly around being able to communicate with data that is normally tied in the traditional enterprise ecosystem, and being able to port that over natively onto the crypto rails. So social media, in the sense of where we look at things as Farcaster, which is one of the protocols, being able to build messaging and owning data on Ethereum. In the case, that's one use case where people that are looking to own the data that they're contributing to the posts, what have you, and having a sense of getting that piece of I'm thinking of the word utility in the regard, and being able to use that to work with other communities in that regard and collaborating in that regard is one area where I take into account for other things in that build up on that front. But more importantly, from outside of the institutional stance, now with the aspects of ETFs now finally becoming a stance, taking much more maturity, and the rate of how that has have been picked up and adapted in a short period of time, is now taken into account of where other asset classes within outside of just financial instruments, being able to see where we can be able to tie business commerce in the sense of bringing that type of work and expanding that on chain, and being able to showcase that work through different type of rails in that front. But I can expand on that on the other topics as well.
Layer 2s I think are a really important feature for scaling, so that the volume of transactions to compete with traditional networks really isn't there. But I do believe that stablecoins, like James was saying, is really part of the future right now. That's going to be the biggest thing that you're going to see, is people slowly, because things you don't just flip a switch and everyone's, oh, we're all just going to start using crypto, right? Like, it's training wheels. People need to get comfortable. Like when crypto first came out, people were just getting introduced to mobile wallet technology, like Google Wallet, Apple Pay. Like, these were just starting to come out, and we already hopped over it, right? So we got to get people caught up to the future that we're already living in, or some of us are, so that the rest of the world can say, oh, I didn't know it was this easy, right? And I think that's why stablecoins are really exciting.
Yeah, and we just saw Bridge get purchased by Stripe for $4 billion a few months ago. It seems like stablecoins in general are starting to attract most investment in the space. Yep.
If anyone wants to build basically a competitor to Venmo that is usable anywhere in the world, a few different blockchain protocols would effectively enable that. You've got obviously very cheap, fast chains with stablecoins like Solana, Aptos. You have a naming protocol like Fio, so people could not deal with these scary addresses. You send it to Paul at Edge, that type of a naming protocol. And then you have the actual stablecoin itself, which can mirror the dollar. And with all of that combined, you can create a much more globally accessible, censorship-resistant payment, kind of friendly payment app, like a Venmo, but using crypto rails. I know there have been some small attempts at doing that, but nothing like even targeting a lot of the users in the U.S. and also cross-border type of users. So there's some opportunity there for sure.
I think that goes a little bit to the on-ramp, off-ramp part, though. So we move hundreds of thousands or millions of dollars from fiat to crypto and pay very, very little to do that. But if you want to go on Coinbase, it takes you a week to ACH something there. You got to wire it's a pain in the ass. At that point, it is easier to use crypto rails, it is easier to use banking rails. And so maybe this is alleviated by some of the blockage we've had with regional banks and community banks, even being able to use crypto, even be able to use stuff on their balance sheet. But I think that's a huge rub still. I mean, beating Venmo is kind of the first step. I mean, Visa is a fairly obvious competitor. I mean, the U.S. is the only country in the world that really has material interchange fees. I mean, to be completely honest, I'm not going to stop using my credit card if I'm not going to use crypto. It's great to get perks. And I think people in the US will still continue to use their credit cards to get perks, but I think over time those go away. If you go to Europe, there's interchange looks like debit card interchange where it's cents on the dollar. So non-US markets are really, really obvious for launching a credit card, an actual credit card, not a faux credit card like a lot of people have today on crypto rails. And like that's imminently doable for anybody. How long did it take Visa to like actually build out a network and actually scale up? It's about 20 years. And so someone here, someone at this conference, someone with an idea, a dollar and a dream can actually build that now. I think that's really exciting. That's the next sort of step in innovation.
Yeah. Oh, I want to I was just going to pick it back up exactly on that front, and I feel that's where like layer twos are trying to fill in that plot hole in the sense of like when we look at the main like sort of like with Ethereum, if being a bank account, the layer twos are acting more sort of like the credit card networks that we're trying to compete against with like Visa and MasterCard in that regard. But and now seeing that kind of scalability, being able to take account of the benefits on the convenience that people can take account of those experiences built on dApps in retrospect to the normal traditional credit card ecosystem. Go ahead.
No, great responses. We'll pivot a little bit slightly here, and I'll start off with Chris based on your expertise at CoinStructive. But as crypto does continue to evolve, ensuring trust and security is obviously now more critical than ever. So how can the industry take proactive steps to address fraud and build consumer confidence? And then are there any recent trends in legislation or technology that you see as particularly promising?
Well, loaded question on the legislation side. Well, so the security is always going to be an issue. It's still not very easy to use, right? Even people who are versed in crypto sometimes still make mistakes and mess things up. It's not as easy as it would seem. I think that's one of the things. So we definitely need more user-friendly applications. But we are starting to see things like Trust Wallet has incorporated a scan technology, so that if you are a sender and you are going to send to a scam, a site that's already, or an address, that's already been identified, they will like pop up a warning notification and say, hey, look, this address has already been flagged as part of a scam, right? So it like lets you know. And you know, that's actually a really big step, because one of the big problems that I see when I work with individuals and victims is that on the fraud side, they're usually, it doesn't happen to be like, it's not just a crypto problem. This is a human problem, right? It's a psychological, for instance, people get distracted, right? They're like, oh my God, my wife was having a baby. I got this email, blah, 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 blah. And so I went on and I did this thing, and then my wallet got drained, right? You can't fix people when they're in that, like, then they have tunnel vision or when they're distracted, right? And you can't fix that. What's that saying? You can't fix stupid, right? You can't. So you have to do some things that are preventative. So on the legislation side, I don't know how much we're going to see on that side, on that front, to change and foster more consumer protection. I'd like to see more. There are some things that have passed. So California passed, and Connecticut also passed a law last year that was basically directed at Bitcoin and crypto kiosks specifically, that said, at least in California, you can't do more than $1,000 a day at a kiosk, right? And what was happening is you were getting a lot of elderly victims being told, well, instead of going down and buying gift cards, they're being told, go to the bank, take out 10 grand. They're going to multiple branches. I don't know why the branches aren't being able to figure out that they went to 3 branches that day, right? It's all the same bank. It's not like they went to 3 different banks. But yeah, it's the Bitcoin ATM operator's fault, right? So and then they would go and they would put in 10, 20, or 30 grand in to a couple different operators in a day. And they would be sending it to a scam. So now you're not seeing that as much because they are not able to do the volume. But this is a very slippery slope, right? Because there's fraud and stuff that happens on Coinbase and Kraken. And what are you going to do you think Coinbase or Kraken is going to say, you know what? to protect consumers, we're only going to let them do $5,000 a day. You gotta be kidding me. So you're gonna tell one financial institution that's regulated the exact same way as another one that they can only do a certain amount of volume with their customers, even though they have the same standards that they uphold as the big exchanges. So when you start to pull out specific business model types and target them, I think it's a dangerous game to play.
Do the exchanges not have limits? I mean, we face, it's not 10 grand, it's much higher, but like we actually have limits. Like we can't move more than certain amounts on and off. With a decent amount of frequency.
So the great thing about doing both investigations and compliance is when you work with victims, they tell you the whole story and you can see how they ended up down that path. When you're doing compliance for a financial institution, people are being convinced by the scammers and coached on what to say and how to answer specific questions. Now, from a compliance standpoint, it's really about managing risk. So there are some prescribed levels where at on the government side that you have to fill out certain forms if someone does X volume, but there's really nothing that says you can only do 50 grand a day. That's what the company internally has written down in their policies to protect themselves from liquidity issues or too many losses, right? That they're actually responsible for at some point. Most time, the great thing with crypto is the institutions aren't ever really losing money, because when victims take the money off and they send it to a scammer, they initiated the transfer. And there's nothing that the exchange can do after that, right? Which is one of the big problems, is because the path for the victim is, hey, Coinbase, Kraken, Gemini, I took money off your platform and I sent it to this guy and now I know I'm scammed. What do I do? And they're like, well, go to the police. We can't do anything to help you. There's no reverse the transaction in crypto, right? That's one of the first things you learn. So what does the victim do? They're told to go to the police. Well, they go to the police and the police say, hey, you know what? We don't even have the capability to do blockchain forensics here. So go to the feds. And so then you go to the FBI or maybe even the Secret Service and you tell them, oh, I lost $150,000 to this scam. And they're like, sorry, too small for us to look at right now. We're only looking at big cases. Yeah. This is not a long weekend in Vegas where you were like, oh, I lost $700 on the craps tables and 500 playing blackjack. You might be able to absorb that for a weekend and be like, oh, it's a tough lesson. You lose 150 grand, where's your mind, right? Like, I want to get that crypto back, right? But it's not that easy. Once it's gone, it's pretty much gone, right? And so, but the problem is for the victim is then they try. You just don't cash it up to like, oh, that's a bad situation. It's a tough lesson to learn. Right? If it was 5 grand, maybe, but if it's 150 or 200 or $1 million or more, right? And sometimes those guys aren't still getting help. So, but what you do is you pull out your phone or you go on the internet. How do I get crypto back? And well, then for the longest time, the #1 advertiser on Google was a scam recovery company. And a lot of the scams, when they were done, were actually flipping you right over to this scam recovery company help. So how did they know even? It was just two parts of the same scam. So one of the things is that, so I've actually started a nonprofit to help victims of crypto fraud, because you see so many people who they're missing 3 things. One is they don't have the funds now to pay for someone like us to do the actual investigation, to hand it over to law enforcement to be able to take action. The second thing is they think if they get the money back, all their problems go away. Right? Because you're like, oh, I just lost the money. If I get the money back, oh, I'll fix everything. But if you're married and you took shared funds out of the bank account and lost them, the trust has already been broken. Even if it's not, you're not having a sexual relationship with something or even romantic, you broke the trust. So then things like divorces happen, or your adult children stop talking to their parents, right? You get singled out, or you get isolated from the people that love you. And then it's this negative spiral that just keeps going down and down and down to some people end up committing suicide, right? So the second aspect of the nonprofit is access to low or no cost mental health, right? So that people can actually process being a victim and then get the trauma, get through the trauma that they've been experiencing. And the last thing, and then I'll wrap it up. Sorry, I know this has been a long spiel, but is preventative education, because like I said, the first scam is not the last scam. Once you're scammed once, you get on a scam list and they target you just like they would for marketing, right? They just go, oh, this guy's been scammed before? Great, let's try him again with a different type of scam. And they know that more times than not, they'll be able to convince someone who's been scammed once into something else. So you gotta help people recognize what the signals are for when they're attempting to be scammed so they don't fall victim again. So, and that nonprofit's called the Crypto Recovery Alliance. So,
Thanks, Chris. I'll start this question off for Amin, based on your expertise in DAOs and communities in general. Tokenized communities and economies are transforming the way both general users and creators interact. What do you see as the next big leap for tokenization, and how can it unlock new values for industries like entertainment, social media, or even beyond?
No, absolutely. I can speak from, at least from, like especially in governance. I think there's, especially with the maturity of how people are trying to, how communities are trying to coordinate in a very crypto native environment. There's been much needed tools to help find consensus on what kind of directions and relations that get processed in mind. Very, very specifically in retrospect of utilizing automation as a form to help process and filter particularly types of unlocking experiences that communities are looking for to help unlock, to help pursue and build out for to empower their either their community or their partners in that regard. So we're specifically with like with social media, I was like just referring back to like the Farcaster protocol. We're now looking at different ways how we can tokenize community gatherings, or gatherings in the sense of utilizing if someone has collected a specific post, I can be able to infer that this person has been like a supporter of that person's content in that regard. And so I can be able to then create personalized like Facebook groups for people that have a specific kind of enthusiasm to partake in that regard. So, and that can be, and we see that also with like POAPs. For those who don't know, POAPs is essentially an NFT that you collect, saying that you actually were in this event or you partaked in this specific type of experience, and it's a way to help extend a hand for people that want to be able to continue to engage with that community, and now utilizing that token to showcase and verifiably get people together in a shared space virtually in that regard. So where we can figure out ways of coordinating that type of activity down the line. It just comes, and the type of automation that comes down, and an AI will play a piece of that, but I can expand on that in another round. But in the sense of community and in the form of entertainment, we can essentially take account of practices in the same way how we go to like concerts and collectibles and showcase our shared enthusiasm and be able to find the curated people that we can find anywhere around geographic-wise to partake in these new experiences on that front.
Perfect.
On tokenization, I'm a fan of crypto being like an actual financial product. So I know there's like DAOs and governance and whatnot, but one of the kind of up and coming buzzwords in crypto is RWAs, real world assets, and tokenizing real world assets. Some of that tokenization is a bit problematic if there is a third party that you're entrusting with that token. So right now, a lot of the stablecoins are third party trusted. Coinbase, Circle have a bunch of dollars in a bank account, and for each dollar they mint a coin. It's been working decently well, but then those coins aren't fully usable everywhere in the world, and they're not fully censorship resistant. Similar things can happen if we tokenize real estate. It's like, well, does the government truly trust that because you own this token, you own a share of real estate? I think a piece of tokenization that's missing, and maybe here's where there's some opportunity, are attempts at using what I would call creative financial primitives to create algorithmic assets, things that represent an asset in the real world, such as stocks, bonds, gold, commodities, but they're tokenized without a third party that actually holds that commodity. You can think of this as like synthetic assets. There have been some attempts in the past to push out synthetic assets with various algorithms that keep that token stable to the asset it's representing. Long term, I fundamentally feel like that is actually the direction of our industries, to use more of these synthetic assets, because they're actually able to uphold the true, what we call ethos of crypto, which is that censorship resistance and fully global accessibility, meaning anyone in the world can use it. And so while I think the SEC would hate to see this, I can imagine tokenized securities, think actual stocks that are normally traded only on New York Stock Exchange, those now being able to be traded 24/7 on a decentralized exchange for Bitcoin or other cryptocurrencies and anywhere in the world. That seems like a pretty ripe opportunity. Yes, it's going to run into some regulatory burdens, but if you're not a counterparty and it's just purely launching a smart contract that can create the asset, and that asset is being traded not with a centralized exchange, but with a fully decentralized exchange, which is a true protocol, that's where you're really challenging the system and in many ways really disrupting what are the giant behemoths of Wall Street. And that's what I'm excited to see, and I think there's some opportunity there.
I guess I could go counterpoint to that.
I'm sure you will.
So no, just genuinely out of curiosity, like I don't know examples where there's tons of examples that have worked. So I don't want to say that synthetic assets have never worked. There's been massive blowups, but there's been massive blowups of everything.
Correct.
Synthetic and non-synthetic, and we have 2008 to thank for a lot of those. What about if we got halfway there? So for me, just a marginal improvement of our financial system is great. If at some point it can be against a decentralized third party, amazing. No third party, no trusted third party, completely decentralized, no counterparty risk. I think this is kind of the training wheels of it, right? Where
I think things like USDC, where there is a company, it's putting money in the bank, that's the training wheel.
yes,
Right? Until we actually make it pure software. So in the history of Bitcoin, many people don't know, but there were Bitcoin-like attempts at digital currencies prior. I think it was called, was it Liberty Dollar, I believe, where you could simply connect digitally to a service and say, transfer money to this address. And you did it with no personal information. You could then acquire it by sending a wire transfer to a random entity, and then you've now acquired this digital asset. They got fully shut down. And so Bitcoin became the uncensorable version of that. USDC has kind of straddled. It is kind of this weird training wheel where so far it has not been shut down, although it has been censored, meaning that there are addresses, if they can be identified as being what any specific government calls a bad guy. So I call bad guys are always relative to who, right? So in the US, we define a bad guy as in a certain way. Russia might define a bad guy a different way. So whatever they define as a bad guy, they can impart onto the company that holds the money. So creating what is remove the training wheels type of crypto is what really enables that financial freedom. And a lot of those protocols are the ones that have exploded in popularity in use case, because otherwise you're much closer to the existing system. And we all know the existing system is pretty ubiquitous. People just use that.
All right, transitioning back to something that Amin actually spoke about earlier, but I was going to kick this off with you, James. So, institutional interest in crypto, obviously we've seen Fidelity and BlackRock launch ETFs at the beginning of the year, is growing pretty rapidly. So how do you see these type of advancements shaping the adoption of blockchain solutions in traditional industries, financial instruments, et cetera? And what opportunities do they create for businesses looking to integrate such technology?
Sure. I think what's really remarkable to me about the Bitcoin ETF is it's the third largest single asset, a little bit air quotes there, ETF on Earth. The largest is the S&P 500. I realize it's 500 companies, but it's really 7. But we'll call, for argument's sake, we'll call that a single asset. Then there's gold, and then there's Bitcoin. And one of those ETFs is a year old. The others are all 20 plus years old. So the fact that it has this sort of prominence already is unheard of, and you will absolutely see more. There will be a Solana ETF. We have an ETH ETF already. You're going to see some really bizarre ones, and then we might go nuts there. But they'll be popularized because of trading volume. If people can move them around, someone can make money on it. Someone wants to speculate on it. So we will see more ETFs, and we'll see more frequent ETFs, and probably a bit dumber of ETFs. For businesses thinking about crypto or incorporating crypto, I can also tell you, you'll see a Schwab USD, you'll see a Fidelity USD. All of the large money center banks and large global financial institutions will absolutely have stablecoins. There'll probably be deposits in a U.S. bank that hold those, and I think you'll see those in the next 12 months. And then the floodgates are kind of open. What do you need a community bank for at that point? We're going to have these giant pools on the internet of capital that's looking for the best home possible. How many times have you looked at a CD at bank A, B, C, D, E, the list goes on and on and on. You've now pooled all of the states, nations, whatever, capital in a pool, and it just makes everything better. If you can service 1 billion people and you can make their marginal cost of capital a little bit lower, you're just going to get better businesses. You're going to get more businesses, and you're going to get more interesting businesses. Yeah, the nice Fed put, that helps.
I guess I'll touch on one kind of buzzword topic before we wrap here, but the intersection of AI and crypto is starting to gain more and more attention. I'll leave this open to anyone to kick this off, but how do you guys see AI enhancing the crypto ecosystem, whether it's in areas such as fraud prevention, decentralized decision making, or just a more general personalized user experience?
Yeah, absolutely. I can speak on this. I supported a virtual hackathon actually last month, partaking in designing a hackathon specifically focused around AI agents. And we actually partnered with 20 other companies that included Coinbase, Safe, Hats Protocol, Eigenlayer, some of the notable people that are coming around. And what we actually designed in that regard, and speaking on that, is allowing developers being able to push their code and showcase their work, pushing that and communicating that with an agent that is pre-programmed to look at the specific frameworks and SDKs to verify that that particular solution was verifiably built out. And so being able to compile that on the agent's end and then showcasing if they have done meeting the conditions that they've been able to pull off, then they can essentially the completion of completing a bounty and then get payment directly on that front. So I think that particular kind of use case is already seeing a way to help autonomize many of those hurdles of being able to peer review that type of build in that regard. The other piece I also look into that, especially from a governance standpoint, is enabling an agent to be able to act and vote on a community's behalf. There's actually an ERC standard right now that's been built to enable an AI agent to be able to be owned as wrapped as an NFT, but also having its own wallet. And in this regard, this ends up opening a number of use cases where one key can do anything of the following: being able to delegate tokens to vote on that person's behalf. If I want to be able to utilize a service that the agent provides, I can then send money to that agent and have access to that particular service of whatever expertise it is for a certain time lock period, and then be able to facilitate ways to help redistribute that revenue generated to other causes that are close to the vote on for the agent on that front. So and now on a risk management standpoint, having AI agents as well, being able to take information inferred directly around the assets that are taking account of the volume, the liquidity pool structure, and be able to pull that and take into account on making adjustments that an agent can recommend and make trades on that user or the community's behalf. So there's a number of use cases that can take away into that realm, and I think I think the ability to facilitate that innovation will accelerate in that regard.
Great.
I see AI as very separate from crypto, in all honesty. Especially, I look at any tokens that claim like we're an AI crypto token as likely failing in the next several years. I do think AI, number one, it's straightforward. We're going to use AI to build crypto, right? Any developer has to use AI. So if you're not using AI and you're developing, you're falling behind. If you're a trader, you've likely had some level of access to bots to help your trading strategy. If you hadn't, you're competing against people that have. So the nice thing about AI is it's brought that ability to create trading bots and brought it to the layman as opposed to just the Wall Street bros who have giant machine learning quants. So it's brought that capability down to like the everyday person. And then, of course, we can do things like have AI or just any kind of bot actually send and receive money, but it can already do that via traditional rails. I can connect to regular APIs to send money. Now it can also send crypto. So that's nothing really new in the intersection of AI and crypto. So I'd say be wary of projects that notably say we are the merge of AI and crypto and here's our token. Unless, you treat it as a meme coin and you're like, I'm just going to get in while everyone's aping into this thing and I'll get out beforehand. I'm open ears and I talk to a lot of projects. And I haven't heard one yet that convinces me that this token has any true utility in this intersection of AI and crypto. But I'm open to be convinced otherwise. So in the meantime, use it as a tool for your trading and for development and do build some stuff in crypto. So we have to because otherwise you fall behind.
I have heard some rumblings that some of the blockchain forensics companies are actually using AI agents, or at least on the back end, for, well, two things. One, they're going to be replacing their customer support people eventually over time. So yeah. That's not really crypto, but you won't get a real person anymore. But they're also using it for they're trying to use it for very complicated things like going through a mixer, right now, which is extremely labor intensive and very difficult to do manually. And then AI is really slated perfectly to be able to ingest thousands of transactions and tell you what went in versus where they may have recombined and come out. So that's something that I know that the blockchain forensics companies are working on. And I don't know if it stems to this other aspect of what has been happening at the federal level. Also in Canada, there has been basically law enforcement has been able to detect when victims maybe don't realize they're already victims. So before they lose lots of money, they're able to come and tell them, hey, you look like you are a victim. We can tell based on your transactions and where you've been sending things that you are likely being scammed right now. And so then they can almost prevent them from losing large amounts of money. So there are some proactive approaches that some of these things are helping helping people to avoid pitfalls.
To wrap up, let's look into the vision for the future. So if everyone wants to quickly touch upon something that they're excited about, a specific innovation, type of project, newcomers to the space, et cetera, for 2025 and then even going into the next 3 to 5 years.
I'll give a very decentralized cypherpunk crypto take, but I think crypto does one thing really, really interesting, that is interest rates, and incredibly high interest rates at that. And so I think you'll start to see a lot more synthetic assets, synthetic dollar assets that are basically a structured product that financial services absolutely love. So not in the sense that you were discussing it, but in the sense of long spot, short the perp of an asset, where you can generate a fixed income instrument that has a consistent yield of 25 to 35 to 45%. I think the world of traditional financing, the world of banks will start to love something like this, and your savings account rate might go up. So fingers crossed.
So truly it's kind of sad to say, but one of the things that I really see is the adoption of custodial services, because a lot of people don't feel comfortable handling crypto on their own. So things like the ETFs, right, where you're not actually touching crypto, but you're getting exposure. Eventually, like now, the banks have been told you can sell crypto. So now your grandfather, right, can go into the bank and buy crypto at the bank directly, and they can actually hold them for him. So you'll start to see that, which I'm not a big fan of, right? But that's also allowing things like the state of Wyoming is launching their own stablecoin, right? So yes, we're not going to have a central bank digital currency, but we're going to have states issuing their own, which goes back to the point of censorship, right? So yeah, you're getting the access, but they might turn it off.
Any last words from any of our panelists before we wrap up here?
Thanks everyone for staying around.
Thanks for listening. Yeah. If anybody doesn't already have crypto, swing by. I'll get you started with a little bit, so you can actually experience sending and receiving money anywhere in the world at hopefully pennies, depending on which asset I give you. And so enjoy.
Just like our president.
Yeah.
I won't send you Trump coin.
Yeah, buy Trump coin. Thank you to all our panelists. It's great to talk crypto with the San Diego community, and if anyone wants to stick around and pick any of our brains, feel free.